First of all, we will understand the meaning of online transactions. An online transaction means online buying and selling of goods and services, and we pay for those goods and services online. Online transaction is simply the process of completing a purchase or sale of goods or services through the internet. Online transaction can be conducted using various devices including desktop computers, laptops, smartphones and tablet computers. There is no need to do any kind of paperwork in online transactions. Online transactions are becoming increasingly common as more and more people shop, bank, and do business online. Online transaction includes transferring money or making payments. When it comes to online transactions, there is no limit. You can make as many transactions as you want without any restrictions. However, you must have the balance in your bank account or you must have your credit card facility. Now, the next point is stages of online transactions. There are three stages involved in online transactions. First is pre purchase or sale stage. The company advertises the product in this stage so that the customer can get to know about that product and is also attracted to buy the product. Next stage of online transaction is purchase or sale stage. In this stage, the customer buys the goods or services and he makes the payment online for those goods and services. Next stage in online transactions is delivery stage. In this stage, the customer gets the delivery of the goods or services. In face to face transaction, in traditional business model mode, for example, one has to travel to talk to the other party, which involves greater time and cost. Exchange of information through the telephone is also troublesome. It requires simultaneous presence of both the parties for verbal exchange of information. Information can be transmitted by post too, but this again is quite a time consuming and expensive process. Internet comes in as the fourth channel, which is free from most of the problems referred to above. In the case of information intensive products and services such as software and music, even delivery can take place online. Now we will discuss online shopping process. The online shopping process we will discuss from a customer's standpoint. First, registration. The first step in online shopping process is registration. In this step, the customer has to register himself on a website such as Amazon, Flipkart, etc. To register, he has to provide his email ID, name, address, and other similar details, which the website saves. After registering the website on the website, an account is created which is password protected. Next, next stage in the online shopping process is placing an order. You can pick and drop the items in the shopping cart. Shopping cart is an online record of what you have picked up while browsing the online store. After Being sure of what you want to buy, you can check out and choose your payment options. Third, payment mechanism. Payment for the purchases made through online shopping may be done in a number of ways. First is cash on delivery, that is COD. As is clear from the name, payment for the goods ordered or services ordered online may be made in cash at the time of physical delivery of goods. Second option for payment is check. Alternatively, the online vendor may arrange for the pickup of the check from the customer's end. Upon realization, the delivery of the goods may be made. Another option of online payment may be net banking transfer. In this case, the buyer may electronically transfer funds over the internet to the account of the online vendor, who may then proceed to arrange for the delivery of the goods. Next option for payment online is credit card or debit card, popularly referred to as plastic money. These cards are mostly widely used medium for online transactions. In fact, about 95% of the online consumer transactions are executed with a credit card. Credit card allows its holder to make purchases on credit. Debit card allows its holder to make purchase through it to the extent of the amount lying in the corresponding account. The moment any transaction is made, the amount due as payment is deducted electronically from the card. Next payment option may be digital cash. This is a form of electronic currency. First, the end user has to open an account with a bank. They then need to ask the bank to provide them with e-cash in lieu of their cash. For instance, the bank may deduct $100 from the account and issue 100 digital coins of $1 each. The bank uniquely marks each coin that it issues. This is done to ensure that each coin is spent only once by a single user. When it is spent, it reaches a different consumer and gets a different number. He may then use the digital funds to make purchases over the web. Next option for making online payment is mobile wallets. Mobile wallets have also become very popular because it is very easy to use them for online transactions, and cashback offers are also provided by them. Wallets like Paytm, Google Pay, PhonePe, MobiQuick are being used by almost everyone in India. It is a type of virtual wallet service, and we have to download the app to use it. The mobile wallet stores details of our bank account or cards and allows secure payments. We may also inform you that we have already uploaded a number of courses such as cybersecurity, past tense, present tense, future tense, email writing, debate writing, note making, most common mistakes in English grammar, letter writing, articles, web applications, forms of business applications, evolution and fundamentals of business, crop production, and much more. You can look out for the same on Google, on YouTube, our own website, Udemy, tutorials points, and many other sites. Thanks for watching. If you like our course, please spare some time to give a star rating to our course.